Greetings, members one and all of the Salivation Nation. The LBMA Silver Vault is at a 6-year low. What signal does that send? And what about the Comex stockpile? Let's explore! Frederick Newcomb, a viewer of the channel, sent me some information about the silver vaults over at the LBMA. We have the Comex and we have the LBMA. They're the two biggies, yes indeed, and they have bars that look like this. These are 1,000-ounce bars. Actually, they can range in weight from 900 and some odd ounces to just over 1,000 ounces. Essentially, they weigh about 72 pounds. And that is a small contract bar. 5 of them make the regular size contract. But here's an article here from Bullion Star, which gives a little bit of insight and a little research on this. Now keep in mind, this is from a bullion dealer, and so take it for what it's worth. But nonetheless, it is interesting, and I think it's worthy of assessing kind of what's happening here, and seems to be fairly well researched here. One trend in the precious metals markets, which has yet to get widespread coverage but deserves more attention, as the plummeting inventories of physical silver at the London vaults at the London Bullion Market Association. These vaults comprise vaults in and around London run by the bullion banks, so JP Morgan, HSBC, ICBC, Standard Bank, as well as the London vaults of 3 security operators, Brinks, Malka Amit, and Loomis. London Sub-Bullion Market Association. There's been a little bit of bleeding there from these vaults. Under the radar, the quantity of silver held in the LBMA vaults has been consistently hemorrhaging for 7 straight months now. The latest data at the end of June shows that the LBMA vaults now hold only 997.4 million ounces of silver, which is about 31,023 tons. Compare that to the end of June of 2021, when the LBMA silver inventory stood at 1.18 billion ounces. It's about 36,706 tons. The LBMA Vault June 2022 month-end silver inventories are now 182.7 million ounces, or 5,683 tons lower than a year ago. It was a whopping 15.48% lower compared to June of 2021, and they're at a 6-year low. And you can see there on this chart how they have declined, especially since last year, and really since November of 2021. Every month or every period has gone down and down. Every month has gone down and down. So the LBMA Vault silver holdings have lost 182.7 million ounces in the last year. Notably, most of this free fall in London silver holdings has occurred since the end of November 2021, with LBMA silver inventories having consistently fallen each and every month since then. From the end of November, when the LBMA Vault reported holding 1.17 million ounces of silver, inventories have fallen by a cumulative 173.5 million ounces. That's a 14.82% drop over 7 months, from end of November 21 to the end of June of 22. So in addition, these June 2022 LBMA silver holdings are the lowest LBMA silver inventories since December 2016. And the first time since November 2016 that the LBMA silver inventories have fallen below 1 billion ounces. Over the exact 6-year period since monthly LBMA silver inventory data was first published in July 2016, there's never been a 7-month period nor a 6-month period in which the LBMA silver holdings fell consistently each and every month. Now, let's go look back to December 2016, we started to see prices of silver go up again, and they were kind of stagnant for a while, but in 2016 they climbed fairly substantially. So is there a connection? Probably not, but who knows? The only partially comparable time period across the data series was when the LBMA silver holdings fell consistently in each of the 5 months between April and August of 2020. And that was during the LBMA Comex exchange for a physical crisis when the LBMA bullion banks, in a panic mode, were forced to transport huge amounts of silver and gold bars from the LBMA vaults to the Comex vaults in New York to meet the delivery requirements on futures contracts, so as to prevent gold and silver prices moving into real price discovery mode. Now that's the opinion they're giving here, but I think I do remember covering that topic. That's pretty interesting, pretty amazing. Over that 5-month period between April and August of 2020, the LBMA silver inventories dropped by 102.2 million ounces, like an 8.7% fall. But to put it into context, the current hemorrhaging of silver from London of 182.7 million ounces has been ongoing since June of 2021, is now approaching a figure that is twice as large as the April through August 2020 LBMA silver vault outflows from London. Well, that's interesting indeed. So the LBMA disingenuously claims that silver and gold held at its London vaults provide an important insight into London's ability to underpin the physical over-the-counter market. Now, again, that's their opinion, but anyways, what the LBMA doesn't say is that the 31,023 tons of silver that it claims was held in the LBMA London Vault warehouse at the end of June 2022, a massive 19,422 tons, or 62.6% of the total, represented silver held in the London vaults that was owned by the exchange-traded funds such as the iShares Silver Trust and the Wisdom Tree Physical Silver ETC and the Aberdeen Physical Silver Trust shares. So that's 62% of it there. But we know what that looks like. There's a huge derivative market built on those. Kind of really doesn't matter at this point. There's over 300 and some odd, at least by the official number. Some say it's a lot more than that now, based off of recent data that was shared in multiple different places. So ETFs held this 19,422 tons of silver in LBMA vaults in London as the month end of June of 2022. There you can see it here. Silver ETF holdings and other London holdings. So look at that. Much closer, much more in ETF holdings than the actual physical works, but much wider going back to 2016. And look at that. Pretty amazing indeed to see that chart. That's wild. That means that at the month end of June 2022, only 11,600 tons of silver, or 37.4% of the 31,023 tons of vault hold, was not held within ETFs. So they do these things and they calculate for each one of those. It's pretty amazing. And by the way, we don't see PSLV because I guess they hold theirs somewhere else. So they have 18,835 tons of silver in the LBMA vaults with the 13 ETFs listed there. Because as well as ETFs listed, additional silver, which is part of the LBMA vault figures, it's held by clients of Bullion Vault and Gold Money. Bullion Vault's clients hold 491.2 tons of silver in the LBMA vaults in London, while Gold Money clients hold 187.8 tons in the LBMA vaults. Adding these two figures of the ETF total means that as of the 26th of July, 2022, a massive 19,514 tons of silver claimed to be held at the LBMA vaults is held by silver-backed ETFs and private client investors, has nothing to do with London's ability to underpin the physical over-the-counter market. Because while the silver inventories held by the ETFs and platforms such as Bullion Vault and Gold Money are transparent, or in other words, reported bullion stocks, there are also custodian vaulted stocks in the LBMA London Vault which go unreported. These being allocated silver holdings of the wealth management sector, such as physical silver held by investment institutions, family offices, and high net worth individuals. And again, how does this all play with the derivatives? Because there's a lot more of the paper to back the physical. And if they can do that, can't they move these numbers around at their whim and will? Seems like they can through some sort of calculated efforts and squeeze the numbers out. Speaking of squeeze, let's talk a little bit about this and how this relates. In 2021, in February, during the initial weeks of the silver squeeze movement, you may recall at the time ETFs storing their silver in London accounted for an incredible 85% of all the silver held in the LBMA London vaults. At that time, the LBMA vaults claimed to hold 33,600 tons of silver, while ETFs accounted for 28,700 tons of that total, leaving less than 5,000 tons of physical silver as a residual to meet all the other silver demand. And that is pretty interesting here, yes indeed. This led to the iShares Silver Trust, SLV, to quietly change its perspective on the 3rd of February, where it added a warning that the demand for silver may temporarily exceed the available supply that is acceptable for delivery to the trust, which may adversely affect an investment in the shares, and that authorized participants may be unable to acquire sufficient silver that is acceptable for delivery to the trust due to limited then available supply coupled with a surge in demand for these shares. Yes, indeed. But nonetheless, it seems to be always, even before the silver squeeze, even before that, there was a lot of more paper silver contracts than the physical to supply it. To me, that's no big deal, because who is going to actually cash out for these Comex bars? Some have, some of the silver squeeze movement had, and documented their experience there. But not very many. Not very many of us. It's not practical to have a 1,000-ounce bar. Given that at the time there were on paper about 5,000 tons of silver in London that were not held in ETFs, but at the same time the iShares Silver Trust panicked that it could not source supply. Well, they shouldn't have. How many people were actually going out there trying to get it? Unless everybody was actually demanding it and going through those huge loopholes to get to it, they shouldn't have sweated it at all. That's my opinion. But hey, who knows? Maybe somewhere. I know some were, and probably were threatening to do more, putting it to the test. The reaction of SLV shows a lot of the LBMA vault silver that's not in ETFs is not available for sale and not available to lease by the bullion banks. The same panic was also commented by consultancy Metals Focus in, of all places, the April 2021 report of the LBMA, where it said that there were concerns that London would run out of silver. Demand remained at a high level. Fears emerged as to whether there was enough silver in London should demand continue at this pace. While this time around July of 2022, the ETFs and other transparent holdings account for about 63% of the silver in the LBMA London vaults. The situation for the LBMA is still worrying. LBMA silver vault inventories are at a 5.5-year low. In total, there are less than 1 billion ounces. The declining inventory trend is still intact each and every month since November of last year. So why is there a large outflow of silver from the LBMA London vault? Why has a net of 173.5 million ounces of silver left the LBMA vaults since early December 2021? Comex eligible inventory, which is silver which is not registered for Comex trading, does not explain it, since Comex eligible inventory has not really moved much overall during this time. So the Comex is still strong. In fact, looks like they've got more in eligible stocks, although their Comex silver holdings are a little bit down, at least from this period from 2020 to 2022. But again, this is not terribly unusual. Comex registered inventory may explain a small portion of the London outflows, but not a lot. Comex registered inventory have been plummeting considering during the year so far, and actually have continued to plummet since early 2021. Comex registered inventory is now at a 4-year low at 59.63 million ounces, having begun in 2022 at 80 million ounces, and then begun at 2021 at 150 million ounces. But still, a net 20 million ounces disappearing from registered Comex this year does not explain a net outflow of over 160 million ounces of silver from London at the same time frame. So here's the registered silver stockpile, and you can see the registered is lower, whereas up here, this is the eligible silver stockpile. So there's that difference only between those. But anyway, so yeah, the registered category is down dramatically, but again, it was down in the beginning of 2020 as well. So realistically, the fact that the global silver market is in deficit this year, with demand greater than supply, and after having been in deficit for 2021 for the last time in years, can help explain why the London silver inventories are being drained. When demand is greater than supply, the market has to find supply by tapping above ground stockpiles, both reported inventories such as the LBMA and Comex stockpiles, and also unreported inventories, those custodian stockpiles which remain opaque and secretive around the world. And I think that very well may shed some light as to the fact that there is no silver shortage. And also understanding that the LBMA and the Comex stockpiles, well, they will flow and inflow and outflow as kind of they always have, and we'll see what happens here. Some can draw some interesting conclusions from this. We'll see what they say. I'm a little bit skeptical of it, but I don't think this necessarily means that the silver is going to skyrocket anytime soon. And so the Silver Institute said that the physical silver supply is growing very slowly and will be about 32,000 tons for this year. On the demand side, demand for silver is growing strongly in all components, from industrial demand to photovoltaic demand. In terms of investor demand, it's definitely growing. We've seen that. Renewed strength for the silver squeeze movement, with a momentum in taking physical silver off the market, would undoubtedly be a real headache again for the bullion banking cartel. For this reason, the bullion bank paper traders are continually motivated to paint the tape and bring down the paper trading generated silver price, while not allowing it to break out to new multi-year highs above $30. In fact, that is kind of a case and argument for suppression in this case. Likewise, as witnessed in early 2021, the bullion banking cartel is terrified of the silver-backed ETFs gobbling up greater percentages of the LBMA vault stocks. If you were a detective, you might say this explains why since mid-April the price has been falling, because since mid-April there's a strong positive correlation between sharp falls in the silver price and sharp falls in the amount of silver held in silver-backed ETFs. It's as if they are reducing the ETFs to shed silver by creating a lower silver price to literally flush silver out of the ETFs. I think that's somewhat of a stretch, but I don't know. They have to see. I think there's so many different other factors that come into play, especially since I track these prices daily, and we see things like the dollar index, like the bond yields, and what the Fed says can move these metals in an instant. And we saw it again as of the recording of this video, the day that I recorded this video, and also in previous days where I've talked about the price movement going down. Now it's going up. And it's going up for the same reasons why it went down. So I don't know that I'm buying all of this, but nonetheless, I can certainly understand why people are skeptical with what's happening with. I think the derivatives market itself alone is probably the strongest argument for suppression, because every time you have more of something, it tends to make the price of, well, you would think it would make the price of those things go down. They're deflated. So the silver ETFs are deflated because there's 300 and some odd of these paper for every ounce of silver represented by it. And we'll see here. So the flushing out serves two purposes: creates a negative psychology and prevents ETF investors adding buying pressure that might break the LBMA shell game and lead us to a situation where there's not enough metal in London to fulfill ETF silver demand. It also flushes out existing silver from ETFs that can be channeled off into meeting physical silver demand requests coming in from around the world. That's just it. What about this opaque, non-reported? Where are they going to go? How are they going to be able to acquire it? Sure, possibly so. And they can move these percentages around any way they want to, as far as I'm concerned, outside the LBMA vaults, unless I'm missing something in how they report this stuff. Each month, on the 5th business day, the LBMA publishes its silver vault holdings for the end of the previous month. With the next monthly update due out on the 5th of August, it will be intriguing to see if the London silver inventories can make it 8 in a row after another monthly fall, and so break the current record, or whether the next set of data will be a turnaround and buck the trend. Either way, it'll be very interesting to watch, and we shall see what happens. There's a lot of pressure in those institutions right now if they're publishing these data, and showing what's happening here. Very interesting piece indeed. Don't know that I agree with it completely, but I certainly can sympathize with some of the conclusions that they come up with. Let me know your thoughts in the comment section below. We'd like to extend a multitude of gratitude to you all for taking the time to watch, and encourage you to please rate, share, comment, and subscribe.